Gerrit, the Facebook numbers kind of feel what we should be looking at here and trying to get an idea of what the ad revenue line is going to look like coming out of Google. Is Facebook a useful comparison point?
It is, and Facebook numbers were very good this quarter, the sort of pushing back a lot of the doubt that the company accrued over 2018, and that's because the fourth quarter, which is always a big a big quarter for online advertising because of the holiday period, was a big quarter for them. Amazon's advertising numbers, which you can sort of deduct by looking at their at their earnings report. It's hidden in there somewhere, but it was also a big year. It was up to about $10 billion in 2018 for Amazon. Now that's quite, obviously quite a bit lower than Alphabet and Facebook, but it does bode well for Google's advertising business this quarter.
So revenue is expected to be up 21%. Sounds like a lot, but put it into context for us. If costs are also going up, then maybe it's not so much.
Right. So Alphabet has, always had this immense growth. That's why the company is worth so much. When it actually comes to advertising revenue, that goes up about 20% every quarter, but 5 quarters that they've been able to keep above that 20% number. So we're looking, if they dip below 20%, although that is still, a very large amount of growth, it would say, okay, growth is really slowing down. What's going on there, especially in light of Facebook and Amazon having such great advertising growth?
What is the regulatory risk that still exists here? This has been the issue that has surrounded so many of these firms for so long. Google seems to have come off a little bit better than some of its peers, but only just. How easy is it for analysts to quantify the risk?
It's difficult to quantify the risk, and if you look at the numbers that Facebook posted last week, one could argue that the risk is almost zero because the company continues to find ways to grow. It's firing on all cylinders in many ways, and especially the things that really brought down Facebook stock last year were not really the regulatory things. Of course, that was a big bump, or a big hit, but it came back. It was more growth concerns. And when it comes to risk, though, there are still big questions. We are very likely to have a major privacy bill in the United States this year, and there will be a lot of wrangling over what exactly that looks like and how harsh it is. If it doesn't come into effect because Congress is not able to pass it, which is also a very distinct possibility, then a different privacy law in California, which is much stricter, will come into effect about a year from now, and that will present a problem for companies like Google.
Are there any potential bombs today? Is there anything that we haven't thought of that might be obvious from the earnings report?
I'm sure there's many things that we haven't thought about, but I think another important thing to look at is just rising costs, and also to look at Google's margins. Costs are rising. The amount of money that they spend to distribute their search engine out to sort of Apple iPhones and the Safari browser is a lot of money, and those costs have always been rising. We'll have to see how much they rose this year.